Investing in real estate can be a very fruitful way to amass wealth over time. The possibility of earning income from rent is among the most significant advantages of investing in real estate. Investors have the opportunity to generate a consistent flow of cash flow if they purchase real estate and then rent it out. In addition, the value of a real estate can rise over time, which results in profits from the sale of the property when it is eventually resold. There are many distinct approaches to investing in real estate, and each one comes with its own set of benefits as well as potential drawbacks. Becoming a landlord by investing in real estate and renting it out is a strategy that is gaining in popularity. This strategy allows investors to collect rent and possibly profit from the appreciation of the property, but it also comes with responsibilities such as maintaining the property and dealing with tenants. One more choice is to invest in a real estate investment trust, REIT, which enables investors to hold a stake in a collection of properties without having to deal with the day-to-day management of those properties. Before you put money into real estate, you should do your homework to reduce the likelihood of losing money and increase the likelihood of making money. Look for properties in desirable locations that are likely to appreciate, and consider the potential for rental income. Additionally, it's important to understand the real estate market and the factors that can affect it. In a nutshell, making financial investments in real estate can be an excellent way to amass wealth over time and become financially self-sufficient. However, before investing, it is essential to acquire an understanding of the risks that are involved and to conduct appropriate research. Investing in real estate can be lucrative and satisfying if one takes the appropriate strategic approach. Worth investing in real estate in 2023. Many industry professionals believe that purchasing real estate in 2023 can still be a lucrative investment, even though it is challenging to forecast with precision how the real estate market will behave in the years to come. The real estate market, in general, has been resilient in the face of economic uncertainty and has a long history of being a stable investment. As a result of low interest rates, borrowing money to invest in real estate can be made more affordable, which can stimulate demand and possibly lead to an increase in property values. It is essential to keep in mind, however, that the state of the real estate market can be very different in different parts of the country. There is a possibility that some markets are experiencing sluggishness while others are showing signs of expansion. As a result, it is essential to carry out extensive research and to center one's attention on investing in regions that have solid economic fundamentals and a growing population. In addition, it is essential to take into account the current state of the economy as well as the possibility of shifts in interest rates and other factors that are capable of influencing the market for real estate. In conclusion, real estate can be a profitable investment in 2023, however, it is essential to conduct extensive research and concentrate on investing in regions that have solid economic fundamentals and a growing population. In addition, it is essential to take into account the current state of the economy as well as the possibility of shifts in interest rates and other factors that are capable of influencing the market for real estate. How much is needed to invest and retire in real estate? The amount of money required to invest in real estate and retire with it can vary greatly depending on several factors, such as the type of property, location, and your personal financial situation. Investing and retiring with real estate can be a very lucrative way to build wealth. If you want to invest in a single-family home, for instance, the price could be anywhere from a few $100,000 to several $1,000,000, depending on the location. The cost can be even more significant if you are interested in investing in a property that has multiple units, such as an apartment building. The minimum amount of money required to invest in a real estate investment trust, REIT, or through real estate crowdfunding can range from as little as $500 to as much as $10,000, depending on the type of investment you choose. In addition, it is essential to think about the ongoing expenses that come with owning a piece of real estate, such as the monthly mortgage payment, annual taxes, annual insurance premiums, and any necessary maintenance. Because of the potential for these costs to accumulate over time, it is essential to have a solid comprehension of them before investing. When planning for retirement, it is critical to have a portfolio that is well diversified and contains a variety of assets, including cash, stocks, and bonds, among other possible investments. Because it can provide a steady stream of rental income in addition to the potential for appreciation, real estate can be an excellent addition to the investment portfolio of someone who is approaching retirement. It is essential to keep in mind that it is also possible to invest in real estate with a relatively modest amount of money, by finding a property that requires repair and then fixing it up, and either selling it or renting it out after the repairs have been made. To summarize, the amount of money necessary to invest in real estate and retire off of its profits can vary greatly depending on several factors, such as the kind of property, its location, and your financial situation. Before investing, it is essential to carry out extensive research and have a solid grasp of the ongoing costs that are associated with being the owner of a piece of real estate. Also, keep in mind that real estate should be one of the components of a portfolio that is well diversified. Investing in real estate now will help you build equity in the future. There is no indication that the housing bubble will burst anytime soon. The typical monthly rent is going up at a rate that has never been seen before. The Federal Reserve has been raising interest rates rapidly in recent years, which has led to a decline in housing prices from their peaks in 2020 and 2021. Investors in rental properties are continuing to reap the benefits of interest rates that are historically low and reasonable. A positive long-term prognosis can be expected for current investors who put their money into real estate as a long-term investment. When most people think of money, they think of real estate investing. You will discover that there are many valid justifications for this. There are only a certain number of listings available for real estate. After all, it is physically impossible to produce more land. As a consequence of this, almost everyone believes that purchasing real estate is a wise financial move. However, it is important to recognize that the conventional viewpoints on real estate are undergoing significant shifts. There is no doubt that the economy is connected to this in some way. People's apprehension about making financial investments in real estate is surprisingly common. Money is a major issue that prevents many people from investing in real estate. Although it is possible to invest in real estate without using your funds, you will still need access to funding. There are a plethora of excellent books on the topic of using other people's money, OPM, to make a purchase. The use of corporate credit is one of OPM's more recent iterations. Some investments, like distressed and repair properties, take more time than others. You'll need to be reachable during normal business hours for other kinds of investments. It may be challenging to find time to invest in real estate if your day job takes up most of your time. Learning how much time is needed for each form of real estate investment will help you schedule your investments accordingly. You must have a strategy for getting out of your investment before entering into any transaction. Be mindful of the phrase feasible. If your departure strategy is not reasonable and feasible, it is not a good one. The property may need immediate repairs and resale, or you may want to lease it out and keep it for 10 years before selling. Always have a well-defined plan for when you want to get out of an investment. Be prepared for the unexpected and always have a backup plan. All forms of investing have some degree of risk, and real estate is no exception. The upside is that these dangers may also bring high rewards. However, you will achieve success as a real estate investor if you put the time and effort into planning and learning. This is the end of the video. Do not forget to like the video, subscribe, and comment down what you think about this video.